The U.S. equity market continues to prove just how committed to the trend it is, once again racing back after a short-lived dip this week. We've talked a lot about investor immunity to downside risk over the past decade plus, and we've been anticipating some sort of a trigger that might expose what we believe to be a stock market that has well overextended itself. Exhausted central bank policy accommodation and government stimulus tools only serve to further highlight this point, and the idea that the trigger for reversal comes from the outbreak of a deadly virus with no vaccine should not be dismissed. At the same time, investors have been conditioned to shrug off downside risk at every turn, and it's just as possible that we see the trend persist with another run to a fresh record high on the horizon. We do, however, think it's worth highlighting the fact that the pace of Fed repo activity that we've seen since the fall of 2019 will not keep up, and we believe that increases the prospect of investor confidence taking a dip with that repo activity. The US dollar has been trading with mixed results this week, perhaps weaker against the other major currencies on dovish comments from Fed Powell earlier this week at the Fed meeting, yet still stronger against commodity and emerging market FX on flight to safety demand. The pound has also done a good job outperforming on its own this week after the BOE surprised at least half the market and held off from cutting rates at the Thursday meeting. Today is Brexit Day in the UK, but with everything already well telegraphed and with so much of the remaining uncertainty not expected to be worked out until the end of the year, we don't expect any meaningful volatility around the event. Earlier today, China PMIs came in upbeat overall and may have helped to bolster sentiment a bit. But it will be back to monitoring the coronavirus into the weekend. As far as the economic calendar goes, key standouts come in the form of German retail sales, Eurozone GDP and inflation, UK consumer credit and mortgage approvals, Canada GDP, US core PCE, Chicago PMIs, and Michigan sentiment. That's all for now.